How's it going? Welcome back, it's Jonathan. And in this video, I want to try and keep it a bit shorter than last time because last time I waffled it on for way too long. So we're going to get straight into it. So if you haven't already, go ahead and hit that like button, hit the subscribe button, hit that notification bell, and leave a comment. If at any point during this video you learn something new, find any value, or want to just keep up to date with what we're talking about here. Now this channel is mostly centered around Bitcoin. We also look at the Dow Jones, we look at gold, we look at the Aussie market. Though, in the future, I do plan to change all that. So if you want to learn life hacks, if you want to learn esoteric knowledge, if you want to learn things that you're not generally likely to pick up on mainstream FOMO channels, well, this is the channel you want to get it at. And I'm going to be trying to teach you esoteric ways of looking at the world and looking at your life, and I'm going to be doing it through patterns in the stock market, because as we know, the stock market, the Bitcoin market, they are mass psychologically driven markets, and that means that we're able to consume, or get a graph at least that's produced by the consumption of individuals like you, me, and other people around us, and we can see it on a graph. So we can see when people are bullish, we can see when people are bearish, we can see when people are hypish, we can see when people are fearful, and we get to get a glimpse of the world at any particular point in the market. So let's take a look at this. Now you'll see the massive lag that's happening. I have figured out, so I'm using the Telstra 5G internet connection at the moment. So it's the 5G home wireless internet. I switched from the LBN network to 5G because I thought it was going to be a much more superior network, but they have some latency issues with their connection to virtual servers. So my virtual server that we're running here over at Windows 365 is now suffering greatly because of this. So we have to put up with it because this is where I hold my charts. Okay, so what I have here is I have the halvening events of Bitcoin. The last two are in green, and the current one that we're running in is just this bar chart that we can see here. Now there's 2 points I wanted to, go over. Now the first one, let me just move this down a little bit so I can get easier access to it. Now the first point I want to move into today, just remember this one here and this one here are the past market movements, and this one here is the market movement that we're in right now. It was not a good arrow, but you get the gist. So a lot of people talking about extended cycles. I think that the market's going to roll on into mid next year before we potentially see the sell-off that happens in the market through 2022 and what it could be into 2023. Now I have a different hypothesis. I think that well, I've written about it at least, so it's all documented. I think that there could be a cycle that could come into play which may occur around September next year, and that could move the market up. Though I go into greater detail into what this is and my thoughts behind it in the link below. So just go ahead and hit the comment section below under this YouTube video, click the link, and you can read the report that I've produced. But it goes into the cycle that I think, so I'll produce 2 cycles for next year, but it goes into one that I think that could kick into effect next year, which may see an early run to the next bull. Anyway, so that's just the thought pattern here. So we have these 2 cycles. These are based on the halvenings, okay? So now a lot of people are suggesting that this market's going to run. So it's going to run, it could run down, and then a massive boom is going to occur maybe between March to April next year. So why is that? Well, a lot of people are seeing this lengthening pattern occur where we're sort of getting these tops here. We're not getting that blow off top, so I think that the blow off top could happen later on in the cycle. Now here's one thing I know about cycle analysis, and here's one thing I know about the markets. The markets will prove the majority of the people wrong, all at the right time. So if, and this is a big if everyone is thinking that the market is going to go up, there is a very high chance that the market is going to go down. If everyone thinking that the market is going to go down, there is a very high chance that the market will go up. And this is something that you will witness oftentimes in the market. And we need to be wary of when the market is very hypish, that the market could reverse, and when the market is very bearish, the market could advance. So we need to keep that in mind, because as more people believe that the end of the cycle bull run is going to occur, so as more people believe it, then there is a chance obviously that the market could run up, but then it could stop out early. And the more people that believe that the end of the market cycle has already occurred, then that gives us clues that potentially we could get one burst higher. Because it's not about the minority being right or wrong. It's about the majority being right or wrong. So generally speaking, the majority are wrong. They call it the sheep, they call it the herd. The majority of people are wrong. Now, that's not to say that you might not get it right, or you might be wrong when other people are right. I'm just saying the majority, okay? So we take a look at the fractals in the market, so specifically just the last 2 cycles. So into this is one of the original cycles. I believe this was the 13 pattern. We sort of had the topping out into the start of the year back then, and then the market traded sideways, and then it boosted higher before it crumbled lower. Okay, cool. I believe this is the 2017 cycle where the market just kept running higher, and then it crumbled lower. The current cycle that we're in right now is kind of a blend of both. You see, we're getting these run-ups and downs, but the whole lengthening theory that a lot of people are going on about could be coming to an end very soon if the cycle is of any clue. Again, now I'm not talking about, time analysis or any other Elliott Wave analysis, which we'll get into soon, etc. I'm just saying that the more people that believe something, we need to be looking for clues of the market going the other way. And it's kind of why I started to get a little, well, let's go to I believe it's my price analysis chart. So let's keep going over. It's why when we got to this chart here, that I made clues that I wasn't very bullish in the market at this point in time because of what occurred back here. Now, everyone was still obviously hyping up that the market could advance higher, and that is the best time to be buying, etc., because the December run's going to come. And I started to see clues. I'm not always right. I was definitely wrong in this area over here where I picked the wrong turn date. But I started to see clues that potentially we should be looking to the downside, and that's why I started to pop in our down boxes, because I didn't think that this market was going to advance like everyone was suggesting. Anyway, so this is where I did get it wrong. Now, I was popping in some clustering areas here, which we can see the market sort of jumping between right now. What happened is the market fell through these boxes, and the reason for that is because I believe it was leveraged traders that were getting stopped out, and the market just breaking through a lot of people's stop losses. So here's my thought pattern at the moment, and I'm going to try and keep this video at least under 20 minutes. So I'm going to just jump through a bunch of things and we'll see how we go. I think that the Bitcoin market bull run is over. Well, I would say that the odds of it being over are much higher if it falls below this low. So this is the September 21 low. I think if the market moves below that, then this run, I'm not saying it's going to definitely be over, but the probability of it being over more so than not over, has greatly increased. So that's something that we need to watch, okay? With respect to our equilibrium, we can see that we're moving higher towards that fear stage right now. So that means that the probability of making safer trades is currently increasing right now. So I'm not saying that it's the best time to be buying, but safer trades are increasing. If we take a look at the Bitcoin cycles, which is one thing that we were looking at, we were definitely watching and waiting for a low to occur anytime into this period here. Now, we didn't quite get that low. This is the big one here. We didn't quite get that, but we did get a low a few days before this box, and that, even though we're not in the box, it's just outside this orb period, and we may need to consider that the current low that we're watching. Now, last time I spoke to you, I said that if the market goes up, hits the right translation and comes down, it can come down any point at once. It can come down all the way down to this. The only thing it can't do is it can't break below this current low. Once it breaks below this current low, the formation of this 90-day Bitcoin cycle starts to get fractured and altered, and it could be signaling that moving forward that the downside is more probable than the upside. But as long as we got a right translation top, which we did, so it was in the box on the right side of that box, as long as we got a right translation top, and if you don't know what I'm talking about, please just go back a few videos, jump up, get up to speed with them, then we could see a low, and the low could come all the way down here. It just shouldn't break below that low. If it broke below the low, then that was bad news. Okay, so Elliott Wave, let's take a look at Elliott Wave, because the theory behind Elliott Wave has now changed. Why did it not change? So here's the chart. So if the market moved below this black line here, that would invalidate wave 3, the wave 3 sequence, because now wave 3 is no longer active. So what does that mean? Well, if we're in an extendable run, like a lot of people are suggesting, now I'm just going to give you all the hypotheses just so you can see how they sort of work when you go into your thinking. So if we are in extendable run, then this wave 5 sequence, which we were potentially in right now, which would see us out until the end of the bull run, this wave 5 sequence and the subwaves of 1, 2, and potentially 3 that we were in, this potential 3, so we have 1, 2, 3 subwaves, this potential 3 subwaves now becomes 1, massive wave 1. So the market's moved up into its 5 waves up. So that's 1, 2, 3, 4, 5. And now it's moving down into wave 2. Okay, so you see how with Elliott Wave, a lot of people think that Elliott Wave doesn't work. Well, you have to move with Elliott Wave. You can't have a static assumption with Elliott Wave. Elliott Wave changes, okay? So now what we're seeing based on this formation here is 5 waves up. So 1, 2, 3, 4, and 5, which would complete wave 1. If this is wave 1 in wave 5 of the longer term wave 5, so that's this one here, then we would see wave 2, which could be in place, and then that could mean that wave 3 might play out before wave 4, and then finally, well, that's an invalid wave 4 because it broke below this one, but you get the gist. So before wave 4, and then a final wave 5 higher. So that's the kind of thought process. Now this wave 2 could just scoot up higher before a wave, so this wave 3, sorry, could scoot up higher before a wave 4 comes into effect. And the wave 5 is generally the shortest in time. So we could still get that blow off top, but again, everything, in my opinion, everything is invalidated once we get a break below this low here. I don't think that the market can sustain itself if it breaks below the September 21 low, and that is why I'm putting a lot of emphasis on that right now. Let's take a look at the Bitcoin squares. So a lot of people don't know about this square theory, but essentially we're using the square of 9 to forecast essentially areas where the market may find support or resistance. And what we generally see, and I had been showing you the 45-degree angle in the past, but I've just got the 220-degree angle right now, is as we move around the square of 9, we generally saw that the market found pretty important tops and bottoms on the square of 9, especially around this 220-degree angle, okay? So as the market came down into this area here, and we saw the 4th being the turn date that I was watching, the 5th for Australia. So when I give the turn dates, I generally give it for Australia time because that's where I am, because when I wake up in the next calendar day, I'm looking for the market to turn, though all the data is in US. So we need to generally, for dates that I give in the US time zone, we generally need to wait 12 to 24 hours Australian time, but sometimes I just give the Australian time. So the 4th was the turn date that we're watching, and as it came down, hit the 22-degree and then zoomed higher, that would have given us greater confirmation that the market is likely to edge higher. Now, just for your consideration, the next turn dates are the 9th. The one after that is the 12th. So I'll just jot it in now. So we have the 9th. And as you can see, we're currently at the 9th now. So we're sort of expecting the market to turn. I believe this is the 8th bar that we're on right now. It's the 8th. So if this is going to be the low that's occurring one day early, then that's okay. The market could advance higher. But we don't want to write it off, or we don't want to come to a conclusion just yet, because we need to wait for the market to confirm. So we generally give it one more trading day, okay? Let me just get the other dates for you. So we had the 9th, the 12th, the 15th, the 20th, the 23rd, and the 29th, and that should round out the end of the year. And if you want to get all the dates that are published for next year, and how you can actually go in and see how the market moves in and out of these dates. So we generally capture a lot of these turn dates. They're not impossible to capture. Some days they're a day off, some days they're up to 2 days off, but generally speaking, we can capture them exactly to the date. So what we'd be looking for here is, ideally, I want to see the market come down into a turn date. So whether it's going to be the 9th or the 12th, I want to see it come down, and I want to see it starts to hit the bottoms on these turn dates. That is the ideal situation, because when I've already spoken about this, I can give you the turn dates, but if you don't actually understand how the market moves in and out of these turn dates, it's not going to help you. And I go into great detail in our private groups, how to actually use the turn dates and what to look for in the market structure. Here, I give you an idea, but out of respect for people that actually want to learn and actually pay to learn, I don't go into the essence of these turn dates. I give you an idea so that you can sort of build your foundation on what you're looking for. But ideally, I want to see the market sort of come down, hit these turn dates on lows, because then that gives me greater confirmation that the market is likely to move higher than it is to move lower, okay? And that's when I'm looking for my exit strategy on Bitcoin, and I'm looking for a way out of the market. I want to be moving out of the market in a bull run, and I don't want to be moving out of the market in a bear run. So what I want to see is, I want to see these turn dates hit lows and then eventually burst so hard higher that we can definitely start to see a top formation. And all we need to do then is look forward at the future turn dates that we can pinpoint the top, and we can sell at least within 1 or 2 days at the top, and we can ride it lower. So that's the key, is what are the turn dates? How do we analyze the market? Is the market agreeing to these turn dates, or is it completely ignoring it? Then once it ignores it, Well, we need to go forward in time and start to look for topping patterns occurring, and we sell on those tops. It's possible. What they tell you is impossible to do is possible. Okay, let's switch out of this. Yeah, I'll save it. Let's take a look at Ethereum price locations where price may find resistance if this market zooms. So the first one, the first box that we were watching several months ago, I believe that it was when the market, maybe September or even earlier, when the market was down here, I started to put on price clustering to the upside, and we're looking for areas that Ethereum may come to. And this green box and this green box were the ones that you can see on another video that I had. It was around the 4,900 mark and around the 6,000 mark, based on the current data in the markets right now. So these red boxes have been produced today, and we're going to start watching them. If this market is feverish to the upside, especially for Ethereum, these two red boxes are, in my opinion, very significant levels to be watching. So that's 7,000 points and 6,200 points for Ethereum. And it has to first get through these green boxes at 4,000, well, 5,000 effectively, 4,900. Wait, not 4,900, let me go back. Yeah, 4,900. And this 6,000 point mark. Okay, so anywhere between, 5,900 and say 6,200, anywhere between that, we could see topping formations occur, and we need to be watching them. So those are some clues for you to be looking forward in how to, first of all, look at price analysis. So we need to be looking into the future where price may top out. You may see a lot of people do this on YouTube or on Instagram, and you might not be too sure how to actually interpret this data, and that's totally okay. But what you're looking for is for topping patterns to occur in and around them. So technically speaking, this one down here is a hit. It came within a percentage of that. It wasn't an exact hit, but it is considered a hit. So that means that this box here is considered active, and we may need to look for another topping pattern occur. And just to give you an understanding of that, I'll just show you the one that occurred in Bitcoin before we round out this video, just so that you can sort of see how you would interpret this, okay? Come on. Okay, so you see how Bitcoin, first of all, moved into the box and then fell away, and then it moved into the box and it shot higher. It's okay if it shoots higher or shoots just underneath the box. It's still considered a hit because we do percentage of, okay? Now, generally speaking, you want it to be within around 2 to 3% of those boxes, but if it gets anywhere inside it, that's okay as well. All right, we'll take a look at the square of 9. So I've been watching the square of 9 for Ethereum as well. Now, what I did when I did go back through all the history of the Ethereum square, you can take a look at that in the last video for the square of 9 for Ethereum. I did find that the two major squares that we should be watching for are the 90-degree angles and also the 180-degree angles, and the two minor ones are the 270 and 360-degree angles. Now, if you don't understand degrees in price, it's going to be a little hard if you don't understand degrees in time, but effectively, all we're doing is we're moving up from a base point up in price by 360 degrees. So from 1580 to 1955, we're moving up 360 degrees, or we're moving around the square of 9 360 degrees. And each time this happens, this square or this revolution is going to get slightly larger each time. So as you can see, this is getting slightly larger each time. And they're just new points in price that we should be watching. So as the market came down, hit the 180 degree, which is one that, we set several months ago to be watching as a significant level. Market reversed, is now hovering around the 90 degree. Whether it's going to break through that, touch the 180, or fall away from this 90 degrees yet to be seen. But to get a greater idea on when you would want to be buying or selling Ethereum, you want to also overlay pattern analysis. So the 180 degree angle, or these angles in general, are a form of price analysis. So price, pattern, and time, those are the three elements of trading. We want to definitely be combining as many as possible. So having the turn date occur for Ethereum on the 3rd at 180 degrees was confirmation that the market could reverse. Now we need to look for the next turn date and also a price change in trend. Okay, so anyway, that's just something that I want you to keep in mind as the market moves up. So if I head over to price and I look at this 6.4 mark, or this 6.2 to 6.4 mark, and I look at this 7,000 mark, what we need to do is we need to head to the square of 9, and we need to see if there's any other price revolutions that are occurring. Okay, let's go ahead and put on one revolution again around the square of 9. So we have the 90 degree and the 180 degree angle occurring around 6.4 and 6.6. So it could come up into 6,395. Let's go back, 6,395, and it could shoot just above this price cluster that I've got here. And that would be two price points that would signal a potential topping pattern around this area. So that is how we combine multiple forms of analysis to get an understanding of our basis in the market. Anyway, I hope that this serves you well. And again, as I said, if you learned anything, if you want to continue to grow your basis and forms of analysis in the market, this is the channel where you're going to learn those esoteric theories that most people simply don't know exist, and the theories that give you the greatest edge in the market. With that said, this is Jonathan. I'll talk to you next week.